Thank you indeed for staying with us here on KTN Business today. My name is Peter Wakaba, and on this second part of the show, we have the discussion around exactly what has been the big stories of the week. And to go through that with me, of course, in studio, is our guest and resident analyst. Mr. Geshinge is, of course, renowned for very incisive insights into the conversation around economics, trade, and, of course, business. And today we'll delve right into it and start off with, of course, the fact that many banks have reported quite good results. But the big story of the week has been the fact that KCB, one of the largest banks in the region, for the first time in 21 years, not reporting a dividend for its shareholders. And of course, this has shaken the markets, shaken the industry. What do you think is going on, Ken?
Many thanks, Wakaba. Indeed, it got many by surprise.
Yes.
Especially banking stocks outside of the COVID era have been known to be the most reliable in terms of dividends.
Yes.
So it was a surprise. It hasn't affected the stock price as much as most people would have expected, meaning there's still great confidence. But obviously, people will be guessing on what happens next, particularly in future years.
And looking at essentially the fact that many banks have reported very, I'll say, stellar results in what has been a tough economy.
Right.
How do you how have they stayed so resilient? What did you say have been the big things that have been done in order to retain the level of profitability or at least stay afloat in this market?
Right. Well, I mean, the high interest rates have certainly helped banks. Some banks have been lending as high as 27%.
Wow.
Obviously, that boosts their revenues.
Yes.
But it cuts both ways because non-performing loans have also been quite significant. I think the industry average is about 15%.
Yes.
Which means a cost for provisions and such. But I think the revenue, the upside has been much bigger. Most of these banks have exceptional credit departments. They're able to understand where the risk is, and they can allocate capital, even in a very high-risk environment. They're able to see where the sweet spots are. So I think it's worked out for them. And of course, on the foreign exchange side,
yes,
many banks, particularly last year, really made quite a bit of money from the dollar-shilling exchange rate. Obviously, this year, it's almost the flip side, but last year, the Treasury departments contributed a significant part of our banking revenue.
As you say, indeed, quite a challenge around lending. We've seen some banks actually almost have to double, in some cases triple, in some cases quadruple provisioning for bad debt or expected bad debt. Do you think this will continue? We've seen interest rates continue to go up in some other jurisdictions. The signaling here is one way or another. What do you think we can expect going forward?
I mean, if you listen to some of the communications coming from some of the bankers,
yes,
is people at some point have stopped taking loans for business purposes.
Yes.
People are taking loans for consumption purposes,
yes,
for school fees, for rent. So it tells you the market is in a very constrained position. Obviously, it depends on the interest rate outlook.
Yes.
I think there's expectation that we might start seeing lower interest rates as we approach the second half of this year, which could be a good thing, but it's not guaranteed. So in the meantime, definitely banks have been very aggressive on the recovery side, which is not a pretty eventuality, but it paints a very tough picture of the current atmosphere. Yeah.
When you look at the fact that the pain points for inflation, things like fuel prices, energy, a lot of consumables, food, and that sort of thing, we had started to see that sort of planing off. We saw the price of fuel start to sort of stabilize and even start to drop. And of course, we expect that the price of energy will follow suit.
Right.
When we look at food, we had seen the rainy season really kick in, but we've seen now an extended dry period. Do you think this will hold, or do you expect that we'll start feeling inflation pressures again, as you point out, towards the second half of the year?
I think that will depend a lot on energy prices.
Yes.
I think there's an expectation that energy prices will start coming down unless it's more geopolitical issues. But even if the latest inflation numbers, if you break them down into high income, middle income and low income, we saw quite a bit of higher inflation on the higher income side and the middle income side, which was quite interesting. People are saying it's tied to exchange rate. Wealthier people tend to import more, so they were more exposed to imported inflation. So that might play out differently across the income slabs. But in terms of inflation outlook, I think the central banks have done well in terms of containing inflation, and I don't see what happened last year happening again, bar another geopolitical event.
Towards the end of last year, as Kenya started to feel the heat of the repayments that were coming up in terms of the loans and the dollar constraints we had, we saw some banking institutions dump Kenyan commercial paper. We saw them dump our bonds. We saw in some cases companies, they start to go slow, but we then started to notice that the market really pick up as our rates started to go up again. In the reporting that we've seen so far in this season, we had seen a classification of this paper into some aspects where it wouldn't expose the banks towards sort of devaluations and that sort of thing. Do we expect to see banks start to book this back onto their balance sheets as profits and that sort of thing because of the uptick in the value again?
Well, I mean, if you look at the bond book for many banks, obviously interest rates have been quite high.
Yes.
Because of rising interest rates last year, obviously that presented a loss for many banks.
Yes.
The flip side could be true this year. If interest rates, as expected, start coming off, then you might see some good profitability, which in a sense will balance off with any FX trading losses that might have been made. So I think for most banks it will be more of rebalancing, but the net outcome is, I mean, banks are full of good accountants. That rebalancing will be done in a way that will always look positively out, but it is a significant concern.
Let's then talk about sentiment and the fact that for a lot of business, the outlook on decision making, the expectations, projections is driven not just by the weather, the sort of signals the market is sending, but also by the politics. And currently in places like Kenya, we're seeing lots of political noise. How do you think this is affecting the sort of business outlook? And what would then be your call to the decision and policymakers in terms of the political sounds?
Well, the challenge, Wakaba, we have in Kenya is we don't have enough data points to be able to make very strong judgments about the future. And if you look at the United States, they have a lot of surveys on household sentiment per se. Here in Kenya, we don't have many. I think the last one I saw was the PwC CEO report, which came out about 3 weeks ago, which interestingly said 48% of CEOs expect a tough 2024. But if you look at it in from a 3-year horizon, 56% expect a better. So it shows you that most CEOs were sort of bearish about this year, but over the next 3 years, there was a slight uptick in optimism. Now, that's just one survey by one company, and it's hard to tell. So, I mean, I think it's a challenge to
grow more data points.
Get more data points. It could be government side, it could be independent players, but we don't have that rich data set to be able to have very strong positions on where sentiment is.
And I'm happy you talked about that, because that then segues us into our other conversation. The survey that came out this week, the 100 best brands most loved by women.
Right.
And we saw at the top M-Pesa. And of course, people have been saying, why M-Pesa? And saying women, tuma kitu. What's your sentiment around this and the fact that we saw M-Pesa, Safaricom being first and second? But an interesting data point, essentially, has been the fact that we have been able to hold this survey, I think, for the second or third time in a row.
Right.
Does this enrich the data that you're talking about?
I mean, I looked at that survey, and the usual suspects showed up. I think the surprise ones were possibly Menengai, and I think Unga. But most of the other brands had been there. I don't know the methodology they use, but obviously these are brands that Kenyans use every day. So they have a high sense of reliability, whether it's M-Pesa, whether it's Equity or Airtel. They have a track record of providing good services.
Yes.
Now, in terms of how much can you tease out from that in terms of outlook on the economy? I think it's still, some people keep saying, if Safaricom is making good profit, it means the economy is growing, but it's a bit...
So essentially you're saying is that this survey then needs to go above and beyond and introduce new aspects of the data that they're collecting in order to make it more resonant to people like you and other players in the economy who are looking for particular sorts of nuggets of information, right?
If you talk about mobile money data, that's a lot of data that could help economists in terms of understanding where is spending happening, where are we seeing more savings happening. I've always said data like that needs to be given to the Monetary Policy Committee at the central bank to be able to see, how is inflation playing out, how is spending playing out. So I think the biggest users of this data needs to be the central bank because they are the ones who determine the monetary policy for the country. But absolutely, if some of this data could be made public, it can be of immense help to us economists.
So again, one of the nuggets of information that I personally picked out from this was one line, and it said that 27% of women are now reporting that they are playing a bigger role in decision making in terms of purchase, and specifically in purchase of alcohol. That they're now being regarded as people who buy rather than letting someone else make their own decision in terms of brand and location and that sort of thing. And this was coupled with another nugget that most of these purchases are actually online. Where do you think this is going? Is it empowerment? Is it the fact that the incomes that have grown? Or is it that with the availability of remote purchase, you're then first, of course, insulated. Second, you have more choice. And then the convenience.
There are three layers to that. Obviously, there's the women empowerment narrative, which has played out over the last 30 years in Kenya. I think much more than in other African countries. Number two, you've talked about internet connectivity. So somebody has the anonymity to make a remote purchase. And I think the most important is the financial inclusion. If you look at where we are now versus 20 years ago, the number of women who have bank accounts and are financially viable has completely grown up. So I think those three are playing out, and it's changing the structure of demand. It's playing the structure of consumers. And I think marketers now will need to pay attention to that because it points to how the new demand will look like moving forward.
As we start to go towards the close of the show, I want us to delve into the other big story. It has been, of course, the fight against illicit alcohol. You might not be an alcohol expert, but the fact of the matter is that in other jurisdictions, in 1929, we saw the prohibition start off in the States. And this sort of narrowed down the choices and access that people had. And we saw the upshoot, the explosion of illicit alcohol, making billions for the mafia. Do you think, first, that might be happening in this case? Secondly, could anti-competitive behavior by dominant players in the market then also be stifling what should normally be the usual growth in this sector that would produce choice at the lower end of the market?
I like how you began with the 1929
the
prohibition.
And then the prohibition,
and in fact, you're right. It led to a lot of illicit consumption. In fact, we had the rise of what are called speakeasies, secret places where people would converge and partake. Obviously, when you're in a situation where people don't have free choice, they tend to move into what we call the black markets, whether it could be in a currency perspective, it could be in an alcohol perspective. And the whole idea of a free market is to allow different players to play. So when you have anti-competitive behavior, and it's not called out by the regulator or the jurisprudence of the country, then obviously it leads to businesses not investing in that sector. You have to remember the Microsoft case in America in the 90s with the antitrust lawsuits. So sometimes the jurisprudence has to be strengthened to be able to call out anti-competitive behavior, but the regulator has to be empowered. So the question is, do they have the capacity? Are they really empowered from a capacity perspective to identify, to call out, and to adjudicate on anti-competitive behavior.
In 30 seconds, could the government also be empowering this by labeling alcohol first generation and second generation?
I mean, that's an interesting perspective. I've not seen it happen anyway. I think the government's biggest role is always in regulation.
Yes.
It's always to create a level playing field.
Yes.
And I think it's always to talk to the regulators to be able to ask, are we always playing in a level playing field?
Yes.
I've always said a vibrant market needs to have 5, 6, 7 players. Anytime you have just 1 or 2, it tells you there's something missing. And because investors will always want to come into a sector that's making money. So if a sector is making money but no investors are coming in, it already tells you that something is a bit off. So I think I think the big part would be on the competition authority.
Yes.
To be able to strengthen capacity, to build frameworks where it's very clear when you say you're dominant, what that means in terms of, from an economics definition. I think that's what maybe has been lacking.
Okay. Well, thank you very much, Ken. Very insightful conversation, right? And the nuggets that, of course, many businesses can use. Here at Business Today, we talk about providing information that people can use to make decisions that improve their lives and, of course, improve their businesses. Asante sana.
Thank you very much.
Well, that conversation right there brings us to the close of this conversation for this week. But come Monday next week, we will be back in studio with an incisive look at what will be making headlines on that day in Kenya and across the region and across the world in terms of business. And also to remind you that Monday, 2:30 p.m., we will also be back on air with the Farm Kenya show on Farmers TV. So do make a date with us on Monday. My name is Peter Wakaba. Enjoy the viewing ahead and enjoy the rest of the week and the weekend ahead. Kwaheri ya kuonana.